Hello and welcome to the Unique CPA with your host, Randy Crabtree. We're committed to creating a thriving community of accounting professionals who are physically and mentally healthy, fulfilled, and energized by their work. Our ultimate goal is to elevate the reputation of the accounting profession and vastly improve the lives of those in it. The Unique CPA is brought to you by Tri-Merit, the specialty tax professionals.
Today, our guest is Jody Grunden. Jody is a co-founder of Summit CPA Group, which was founded in 2002. He and his partner merged that with Anders CPAs and Advisors this past year in 2022. He is author of a couple books, Digital Dollars and Cents and Building the Virtual CFO Firm in the Cloud. Enough of me trying to explain who you are, Jody. Jody, welcome to the Unique CPA.
Yeah, thanks, Randy. Appreciate you having me on.
So a couple things. When I was doing the research on you and on Summit, I didn't get too deep into it because today, and this will date when this is being recorded and when it's being released, which is probably going to have a handful of months in between. The USA was playing in the World Cup, and I was trying to research you and Summit while I was watching soccer today. And so got pretty well into it. But some of the things that I wasn't mentioned in the intro that I thought were pretty interesting, and I was hoping you could expand on it. Mm-hmm. I saw the Summit, and maybe even you personally have been awarded different titles and awards and digital CPA and everything else. So can you expand on a couple of those? I saw a big one in 2017 and 2022. And was that a digital CPA thing, or what was that?
Yeah, it was actually both. So we were awarded the Innovation Award for the Indiana CPA Society, the inaugural one in 2017. In that same year, we were one of the finalists for the DCPA's Innovation Award, the national award. Fortunately, didn't make it. We didn't win at that time, but 3 years later, during the pandemic, we ended up winning that award outright. So we've won it both at the state level and now at the national level, which is super cool.
Yes.
And we're chairing the DCPA event coming up. Well, actually, DCPA event in Austin this in 2022. So I was able to win that honor, which I'm super stoked about, speaking in front of the DCPA and kind of sharing my journey.
That's pretty cool. And again, to date ourselves, that's next week, right? In Austin. I actually may show up there Sunday night into Austin. I haven't decided. I am not going to the event. It's sold out.
Yep.
But there's another event there that I may go show up to. But I was going to reach out to some people and say, hey, if you're in town, you want to get together? I don't know what kind of outside of the conference events they have, but I may have to reach out to you if there's something going on.
Oh, sounds great.
Yeah, I'll let you know. All right, so let's get into this. Enough about me and what I'm going to do. Let's talk about you, and I want to get into the history of Summit because I'm intrigued by Summit by multiple ways. One, it's just the history of how you set up pricing with it. Two, it's the whole building this niche practice, which we've done with Tri-Merit, but this niche practice, but also having a niche client base within this practice. So I'm going to want to get into those eventually. A little tease there, but what I want to talk about first is a little just history. I mean, you were in public accounting for years, so give us a little of that, and then give us that how then Summit was born out of that, where this idea came from, and how you got it going.
Yeah, no, great question. So I, right out of college, worked for both George S. Olive, which is now BKD Forvis, and then worked there for about a year and a half, and then I moved over to Crow, moved back to my local town, Fort Wayne, Indiana, and worked for Crow and then BKD. So I've had about 3 years of public accounting, decided pretty quickly that public accounting just wasn't for me. Too many hours. It was, there's a lot of negatives that went along with it. And I was super important to have a strong relationship with my family at that point. I married with 2 kids, all under 3 years old. So pretty young. And I had to decide, what we wanted to do. And so I decided the corporate world was for me. I'm going to move and go into the corporate world, and that's where I'm going to make my stay. And so I went to the corporate world for about 3 years. I worked in the treasury department of a $250 million manufacturing firm, did all the accounting for it. Not accounting, but I did all the tax work for them. I did all the money management. A lot of great stuff. The only problem, it was like Groundhog Day. It was like the same thing over and over and over. And it was exciting the first year because you're learning, right? Learning something new. Mm-hmm. But man, year 2 was horrible. It was, I was like looking for things to do. And it was like, this really wasn't for me. And it just happened that we were going through layoffs. And I took the opportunity. I was actually part of that committee and took the opportunity to say, hey, I'm going to bow out myself, and I'm going to go with this regional firm and start run their small practice. And they said, perfect, that'd be great. I hate to lose you, but only stipulation is you've got to be able to do our tax return. So take it with you. I thought that's great, because that was kind of cool, because it was a $30,000 return at the time. That was a long 20 years ago. That's a lot of money.
Yeah.
And it was
Yeah.
kind of seed money to kind of help get things going. And so with this regional practice, again, that wasn't a lot of great ideas, just wasn't working out for me. And I thought, hey, I just need to go out on my own and do this myself. And ironically, my wife decided, she's an attorney, she decided that she wanted to go out and do her thing on her own herself too. So the same month, we both quit our jobs and started our own businesses. And wow, what a risk that was. And when I look back at it now, I think, wow, that was kind of a fool's move. But, it worked out. Oh, I forgot to tell you, we actually, back then, they had the houses that you can buy without having to show your income and stuff. And so
Yep.
I had a brand new house too. So brand new house,
Oh, nice.
just moved into, two little kids and no money. And so the only money I had was actually coming from the manufacturing company that still wanted me to continue doing their corporate tax return. So hired my first employee with no clients, no money, and I was off to the races. And from there, the idea was that if I do this, I was going to change the way that it was going to work. It wasn't going to be a traditional accounting firm. It wasn't going to be work a bazillion hours. It wasn't going to be hiring people and they're working busy season and they're rotating out every 2 years because they're burnt out. I didn't want that type of a thing. And so I had to kind of figure out how we can do this and how I can create this thing. A big E-Myth prescriber, and I love that book. And, it talks about processes and stuff. I thought, this is what I'm going to do. I'm going to really make myself invaluable, and I mean, where anybody could do my job. And so it's like, so everything we did, we documented, we processed, we tried to make it so it was repeatable and scalable. And we just kind of grew it a little bit at a time. And we weren't wearing the suits and ties like all the business, all the CPA firms were doing at the time. Now they're a lot lax, but that was a requirement when I was in there. And, we were wearing just regular Dockers, golf shirts, whatever. And clients loved it because it was more them. It wasn't like we were talking down to them. We were more on their level, and they appreciated that a lot. And so, so we started, doing the hourly work, doing the tax return just like normal. And then I realized quickly, not having any money, starting with family and everything, I couldn't afford to be the bank. So I had to figure out a way to actually, charge these people, but in the same time, not have this. And so I decided, hey, let's just go ahead and bill people up front. So how are we going to do that if we're billing hourly? So we had to kind of change our philosophy, and we changed it to like a value bill. And so we based it, on, replacement value and all these different things. We came up with different ideas on this value bill, and we were going to charge them up front, and which was great. Clients thought this is awesome. No pushback at all. We thought, wow, this is kind of neat. And so we thought, let's expand this even more, and let's meet with the clients more often. Instead of at the end of the year, let's meet with our bigger clients once a month. We thought this would be great. And so we met with them once a month. And so we thought, well, what are we going to talk about once a month? And so we ended up talking about financial statements and stuff like that. And it wasn't really exciting to the client. They didn't, they came sometimes, they didn't come sometimes. It was kind of more of an excuse type of thing. I think they liked me and they wanted to help me out. And so, we thought, how can we make this more valuable to the client? We thought, hey, let's not talk about the past anymore. Let's talk about the future. Clients love talking about the future. And so we flipped our model, and we started talking about cash flow, basically cash, next 12-month burn rate. Here's what's coming in, coming out, kind of give them that view. We started talking about long-term forecasting. So even outside of the short term, hey, what's cash going to look like in November, December, January, February? We're going to borrow the line of credit. When we're going to pay off our debt, all that kind of stuff. The clients loved it. Actually, they started coming to the meetings regularly and looking forward to it. So much so that they asked us, hey, can we do this more frequently? I'd pay if we could do this, if I could meet with you every week. I'm like, well, of course you can meet with every week. And so we started meeting every week with about half our clients, and they just loved it. Again, we created meeting topics, and we're going to talk about financial statements. Then we're going to talk about forecasting, maybe the next one. Then maybe for a service-based company, a pipeline conversation, maybe about their business development or marketing, some of the things that are outside of the quote unquote accounting scope. And we just started really kind of helping the client and really really helping them run their business. And they just loved it so much. And with that, it became that subscription-based model we had, because now we had the value-based billing. And we thought, you know what, let's not invoice the clients anymore. Let's just zap their accounts. Why send them an invoice? That's kind of silly. No one cares about invoices, and they don't, they're always paying late, and they're always apologizing while they're paying it late, and all that kind of stuff. And so we thought, hey, let's do that. And so we set up where instead of sending invoices, we're going to zap their account every Monday morning. So Monday morning is my favorite day of the week by far. As you can see, went from $0 to $10 million today. That's a big chunk of money coming in every Monday. And, with that, it's kind of funny. We never looked back from that. And the subscription-based billing just kind of picked up and, really headed forward. And we really focused on that virtual CFO service as our service vertical and kind of didn't look back from it. We bundled everything up, packaged it up. Like I said, clients loved it. No pushback on fees ever in regard to the subscription base, because every new client, that's just how we do it. And
Nice.
they don't know anything different, right? And so that's kind of how we went there.
So a couple things based on that then. When you started this, when you left, when you and your wife took the risk at the same month and didn't look back, and I have a question on that, so we'll come back to that. You were a traditional firm at that point, right?
Yep.
It was just traditional. So how long was that process from traditional to outsource CFO?
2 years. So once we, after 2 years, we thought, let's do it. 2004 is when we actually decided, hey, let's do this. Let's do a virtual CFO. We didn't have a name for it. We did a dictionary search. We went and Googled. We couldn't find anything but outsourced CFO at the time.
Right.
And we didn't want to do that because it sounded like it was coming from India or a different country or something like that. And so we thought, hey, let's change the name of it. And we did virtual. Nobody on the internet was doing virtual at that time. And so we did it. Years later, we found out there was a few firms doing virtual way before us, but just wasn't using the internet to advertise it. And we just continued and called it Virtual CFO Services. Now,
nice.
A lot of the accounting firms across the nation, you'll see that name, which is kind of nice. And it's not my name, but it's the name we used to start the service off. So, so it took 2 years to convert. It basically converted everybody pretty quickly. It was within about a year once we started converting them.
So does that mean that you stopped doing tax returns then, or were you still doing tax returns?
Still did tax return, but we included tax return as part of the service. So we actually led taxes first. Meaning that the whole idea was we're going to provide this forecasting model so that you, the taxpayer, are going to know exactly what your tax return is going to be in April, and there will be no surprises because we're going to give you forecasts all the way through. You're going to have a great idea. You're going to be able to save the money up in advance. We can do all of our tax planning ahead of time. And then at that point, you've already got the money for it. You're just paying it, and then there's no issues. Because again, that's when we started off, we got a lot of our clients because they had a big tax surprise in April. And they're like, well, they're looking for a new tax preparer, and it's not the taxpayer's fault.
Right.
They're just the messenger in that regard, nor is it the taxpayer's fault when they get a big refund. Right. But that's not how clients look at it a lot of times. And so we thought, hey, let's eliminate that and let's take that to our advantage. And so that's what we did.
Well, and you said it's not the tax preparer's fault, and it's not. But they also could be more proactive like you were. And if the tax preparer is just waiting for the numbers at the end of each year, which I don't think they should be doing, and that was the conference you and I were at, was a tax advisory conference.
Exactly.
They need to change that mindset because clients don't want that anyways. Clients want what you're doing. You just started doing it 20 years ago when a lot of people are just getting to that point now where realizing that this not even just client accounting service, client advisory services, but tax advisory services is an important aspect.
Yeah. Wouldn't it be kind of cool, Randy, if all the business owners had exactly the amount of taxes they need in their bank account by the end of December?
Yeah.
And then all they're doing is simply cutting that check, and that's it. Because it's in a separate check all by themselves. Well, that's kind of what our clients experience.
Yeah. No, that's great. No surprises. They know they're not surprised. You don't come March 15th or April 15th or September 15th or October 15th and say, okay, well, we did everything we can and you still owe $222,000.
Right.
And then they're not happy. No, they know you've done everything because you've informed them monthly, even weekly now with some. And so let's go to the pricing then. Mm-hmm. I mean, there's so many ways I can go because what you're doing right now is things that I love talking about because this is so important with taxpayers. And it's so important, I think, as we continue to grow in our profession, which we need to continue to grow in our profession. But let's go back a little bit to when you switched the pricing model.
Yeah, sure.
Because that was, I mean, I don't know, when did Ron Baker first come out with his value billing book?
Oh, it was way before me, that's for sure. Yeah. I mean, I read his book. That was one of the big things that sparked the idea.
Yeah.
His was a little different. He was value billing based on the tax savings
Yep.
and the savings that the client received. And I went into the value bill based on what we're going to replace.
Okay.
So my value is never proven. I didn't have an ROI every year that I
Okay.
had to actually hold up to, right? Because mine is more, hey, who are we replacing? We're replacing an accountant, so maybe a quarter of an accountant. So you're talking maybe $15,000 there. Replacing a CFO, maybe a half a CFO or whatever. And so there's another $100,000 there and so forth. And that's kind of how we built our pricing structure.
Yep.
Initially, we didn't. We built it on profit margin and stuff like that. And that never worked because we screwed up. We could never get it to where we actually did over provide as opposed to under provide. And we almost went out of business the way that we actually were approaching it in that way. So when we actually reverse rolled it and said, hey, we're going to value bill based on what we're replacing, it was so much easier. And the competition wasn't there at all. There was nobody out there doing what we were doing back then. So we were always up against a warm body, and that was a very easy sale. The only difference was that back then we were a brick and mortar company, and so we actually went out to the clients. They came to us. We were face to face. The video stuff didn't exist at the time,
Right.
And it wasn't until probably 2000. I would say 2009, 2010, did we actually start using the video? Because that's when actually the lips and the words and everything actually matched up. When we were doing it way back then, and we started using that, but it was still people locally, and it wasn't until we actually got our first creative agency, which we eventually became our niche. There in Rhode Island, we're like, hey, they asked us if we could be their CFO. And we're in Indiana, and we're like, sure, why couldn't we be? And they're like, well, do you have to come out and talk to us? And I go, well, do you need us to come out and talk to you? And like, no, we could probably do it over the phone or whatever. I'm like, exactly. That's exactly how we're going to do it. And from there on, it was like, we were not going to another client and clients were going to come to us anymore. So we kind of cut that off right away and went to the complete virtual model in the way that we actually provided the service. And then it wasn't until 2 years later, because we learned so much from this client, because this client was actually fully remote. Back in 2011,
they were remote.
They were fully remote. Yeah,
okay.
They were remote.
Okay,
100%. 60 folks on their team all across the United States, Canada, and they had a few in other countries. And it was like, this is a pretty cool model. And 2 years later, I thought, what, we can do this. I've learned everything from them, what works, what doesn't work, and we decided to do the remote thing in 2013. And we had 18 people at the time. We weren't really large or anything. Mm-hmm. I owned the building of the office that we worked in. I thought, this is perfect. I'll rent it out to somebody else. This is great. And I went to the team and said, hey, we're going to go fully remote. And they just looked at me like a deer in the headlights. Like, we are not doing that. You are off your rocker. We always started with a joke. That's how we started meetings off with. And they thought that was the joke. And it was not the joke. It was, I was just so excited about it. And then they beat me up so bad. And with all the different excuses they had. And I thought, I can't lose my team. And so I thought, well, I'll just do the remote thing with the clients, and I'll have our brick and mortar office. And so I thought, I'm going to remodel the office. And so I truly remodeled it. I kicked everybody out of the office. We gutted it completely. Construction companies tore walls down. They made this thing look pretty cool. And we built it for about 30 people, thinking that, hey, within about 10 years, we'll probably get to that 30-person mark. Hopefully, fingers crossed. And, with that, it was about 6 weeks into the deal. They all had to work from home because we're doing the remodeling and stuff. One by one, they all came to me and it was like, hey, I love this working from home thing. You mind if I work from home? And it was like, it was kind of funny at first. It was like, yeah, sure, go ahead. And then it was after like the 15th person came to me. It was like, wait a minute here, team meeting, what's going on? And they decided, they loved it. They figured out all the issues, kind of like fast forward to COVID. Everybody figured out how to do it. It was tough at first, but after 6 weeks in, it was you figured, you got the rhythm, you figured it out.
Yeah.
And they said, hey, let's do it. And I thought, you know what, it was a great investment. I spent $100,000 on a building that I'll never use, and I could have took everybody to Hawaii and had a great time.
Yeah, exactly.
Yeah, and we went from there on. And so we were providing a virtual CFO service, and I hired people all across the United States. So we were providing it completely remote to people in different cities across the U.S., which was really kind of a cool concept. And when you think about it, I could have 4 people on the call and they could all 4 be from different
Oh yeah.
states. And they loved it. And that's when really things started really picking up when we did that. And because that was our first creative agency, they loved our services so well. They're still a client today. And
Nice.
they referred clients to us left and right. We started really picking up, 3 or 4 of these agencies. We had about 10 agencies under our belt. We think, oh, this is pretty cool thing. And then we were kind of fortunate because we were in San Diego at a remote conference. Now, keep in mind, in 2013, there was maybe 100 of us out there.
Right.
And Forbes, we were listed in Forbes as one of the first 125
Really?
firms to ever go remote. Yeah. The first financial firm. Now, who knows if that's true, but that's what Forbes listed us as at the time. And, with that, we're like, this is kind of cool. We're learning from all these companies, what to do right, what to do wrong. And a creative agency owner that basically ran leadership camps for creative agencies approached us, just happened to be at the conference there, and said, hey, would you be interested in going to New Orleans and teaching, creative agencies how to be profitable? And we got this accountant right now. He's got his pocket protector and calculator in his pocket and all that kind of stuff. And he's really not connecting with the leaders there. And I'm like, yeah, I'd be happy to do that. And I thought, yeah, let's try it, and they're like, well, when can you do this? And now keep in mind, at that point in our career, I had no money. I still had, we were scraping along, trying to figure it out. We'd have some success, then we'd be back, failure, success, failure, success, failure. And, so I talked my wife into me going to San Diego at this remote conference without her. and I'm in Indiana, nice weather. And now I've got to figure out how I'm going to explain it to her that I'm going to New Orleans in 2 weeks. So
wow.
I did. She was excited about it. Went to New Orleans in 2 weeks. With that, I had no idea what I was going to prepare. I happened to pull a nerve in my neck at the time. If you've ever done that, it's horrible.
Yeah.
You're walking around, you can hardly move, and being on an airplane is even worse. That was by far the worst experience. Trying to stay still. And I went to New Orleans, and I had no idea what I was even going to talk about. It was like, I had 2 weeks to prepare this. I had a complete mental blank. He said, don't have a PowerPoint. So I'm like, okay, so I just got to talk. What am I going to talk about? Because he didn't want me to do the traditional CPA thing. And I'm like, okay. And I go, give me an easel board and I'll see if I can do something on an easel board. And I still had no idea. And I got down there and my luggage didn't show up. It went to Tennessee. I'm in New Orleans. It went to Nashville. And I thought, wow, what do I do now? So I walked over to the mall. I bought some medicine for a leave for my neck because my neck was on fire. My phone was dead. So I got a battery, or I got a charger for my phone. I got a bottle of water. And then I'm like, okay, now I got to find some clothes to wear. And with that, right across the street was a Tommy Bahama. And I thought, that's kind of different. That's not a traditional CPA.
Right.
I think I could do that. Plus, it was really close. I was in pain. I thought this will be great. And so I walked into Tommy Bahama. If you ever shopped there before, expensive as heck.
Oh, yeah. Yeah.
Very expensive. And I thought, oh, my wife is going to just kill me now. So I bought 2 shirts and 2 pairs of pants. I didn't have any clothes. And then I thought, well, now what? I got to go get some shoes. And I went to pay for it, and my credit card got denied. I was like, oh, no.
You really didn't have any money.
So I'm like, yeah, what is going on here? So I got my other credit card out, and I used that and went through fine. And so then I went to the, right next door, which just happened to be a shoe store. A guy helped me pick out shoes for this Tommy Bahama, and I was pretty stoked about it. Got a couple pairs of shoes and went up to pay, and my second card got denied. I'm like, oh no, this is not good. So I pulled my debit card out. I'm like, I know I got cash in here. And so I give my debit card, goes through no problem. And so I'm thinking, wow, that was weird. No idea what's going on. But just happened that we had our dinner that we had to attend, that kind of like a welcome dinner with all the different owners of the firms that are coming together as a welcome dinner before the actual conference. And there's 30 of us there. And I'm like, hey, this is kind of cool. I'm going to get everybody's appetizers. I'm the financial guy. I kind of make a good impression on everybody. And so I go and order appetizers. We've got all these kinds of, they had all these kinds of oysters and all different kinds. It was really cool. And I went up to pay for it, and guess what? My debit card didn't work. So I'm like, oh no. I turned to the guy next to me. I've only talked to for like maybe an hour. I go, dude, I have no clue what's going on. He goes, oh, you don't travel much, dude. I go, no, not at all. He goes, oh, fraud protections on your card. I'm like, oh, I go, I go, oh, can you pay for my meal and their appetizers? I'll get you in the morning. He's like, no problem. So,
That's
I
what
got
it
him
was.
cleared up in the morning, all that type of stuff.
Yeah.
And then I got to the conference and I was like, I still didn't know what to talk to. I let off. I was the very first speaker. I'm like, this is going to really be bad. And so I started off and I basically started off talking about the experience, going, with the leave and credit cards getting denied and everything. Everybody's just laughing. And it was a great icebreaker.
Yep.
And it was one of those things I just did it because why am I wearing Tommy Bahama? And then I asked everybody, hey, if you could raise your prices by $10 with all your clients, I go, would you lose any clients? And raise your hand if you hold your hand if you don't think you'd lose a client. And then I went to $20. I went to $30, $40. Hands started falling and stuff. And I go, okay, let's keep that $10 in mind. And so then I got the easel board out and it hit me right away that, hey, I'm going to show them how to be profitable. And so I drew up what utilization, I drew some stick figures. And I'm not an artist by any means, stick figures. And I can't calculate in my head. Admittedly, I'm a CPA that cannot calculate in their head. So I grabbed somebody, I go, hey, give me my calculator. And they're like, yeah. And so they're participating and he's doing the calculations for me. I'm going through utilization, average bill rate, making it super simple. And I broke it down that, hey, one producer should make about $200,000. And I showed how to do it. And I go, let's make 17 producers. Okay. And now we've got $3 million. I go, okay, now let's just raise. Now we talked about it, and everybody here said that they could raise their rates by $10, right? I go, well, let's see what's that going to amount. Because they started the thing off saying that everybody needed to have 10% of their annualized revenue in the bank. So if you're a $3 million firm, $300,000, I asked everybody how much, if anybody had that. I'd say half had that,
Yep.
half didn't. And so then I got back and I said, hey, this is $10. And so the $10, we redid the formula, average bill rate of $10. Miraculously, it came out to $300,000. And they're like, wow, this is cool. And it was just like, but I thought I did a horrible job.
Yeah.
I was like, this is bad. Here I'm doing stick figures. I'm doing all this unprofessional stuff. And they just loved it so much that Twitter just kind of blew up.
Really?
And I like I said, I had no idea. I wasn't even on Twitter at the time. So it was like, I had no clue what was going on. And the owner came up and said, you know what? Hey, we'd love for you to do this again. You hit a home run. I wouldn't apologize to him at first. I go, I am so sorry. He goes, oh, you did really well. And then he asked me to come back. And so I came back and it was like 2 weeks later. Again, it was like a two week thing. And he goes, I go, where's it at? And he's like, in Chicago. I'm like, oh, I'm in Fort Wayne. I can drive to Chicago. My wife won't care. This would be great. I go, but the funny part about it was I went out and bought Dockers and cool polos with my emblem on it there, logo and everything. And I brought my one of my CFOs there. He had the same thing. We look great. We show up at the conference. He catches me in the meeting room there, and he goes, dude, what'd you do? And I go, what do you mean? What did I do? And he goes, where's your Hawaiian shirts? And I go, what do you mean? He goes, well, that's what set you apart. You were so different than everybody else.
Right.
I'm like, oh God. So in that half hour, I went down Chicago, bought Hawaiian shirts, came back, and I go, I'll tell you what, I wear Hawaiian shirts all the time in every conference, everywhere.
Oh, yeah.
You can kind of pick me out because of the Hawaiian shirt for the most part.
Oh, yeah. No, I know it. You have a caricature that is you in a Hawaiian shirt. And I actually wrote on my notes here to talk to you about your Tommy Bahama shirt. So, see, I know you as that already.
Yeah, exactly. And that's where the niche started coming from. And so we started doing these conferences. And I'll be honest with you, we did them for about 3 months and didn't pick up a client.
Okay.
But the whole idea is I did that same conference. I did, I basically broke it down, showed them how to be profitable.
Right.
And kind of, nothing about sales. I was never once asking for it. Never once really talking about it. We had an introduction where they'd introduce me as a virtual CFO, blah, blah, blah. But it was never a sales pitch whatsoever. Mm-hmm. And they loved it because they would call me, ask me questions and all this kind of stuff, but no clients. And then it was probably after, I would say maybe, I'd have to go back and look, maybe fourth or fifth one I did in about a 9-month period. I got my first call. That first call ended up being 11 calls within about a month. And we ended up picking up 11 calls in 1 month, in the month of November, 6 in the month of December. And it was like 4 or 5 in the month of January. I thought, oh no, this isn't good. This isn't good at all because I don't have people to actually service all this.
Right.
What am I going to do? I can only do so many of these clients. And that's when the Forbes article hit. And all of a sudden I got resumes, from
Oh, really?
unbelievable resumes,
Nice.
2,000 resumes within about a day. It was unreal. And I thought now it's just a matter of going through them and trying to open them up and get them all, figure out who was going to be what.
Right.
But we actually went through a bunches of them and we figured it out. We were able to hire some CFOs, and then we were able to kind of stop the bleeding and really kind of dial in the virtual CFO process and make sure it's repeatable and that it wasn't heavily relied upon me, because it became heavily relied upon me real quick.
Right.
Because, I got 11 clients now.
Yeah. Yeah.
How am I going to handle it?
Yeah,
That type of thing.
exactly.
And so that's when it blew up. So we actually niched both in, like you had mentioned, in a service vertical as well as an industry vertical. And I'm telling you, the power of the niche is huge.
Oh, it's unbelievable.
Yeah, the virtual CFO, we'd pick up 1 to 4 clients a year, and we'd be like, oh yeah, this is great, just with the vertical niche.
Right.
And we're trying hard to pick them up, trying to pick up anybody. And it wasn't until we actually focused on that creative agency niche that we actually started really blowing it up. Now, that's not saying that we didn't pick up clients outside of that. 60% of our client base is in that creative agency niche.
Okay.
40% is something else. So we marketed strictly towards it, but we could pick up and then we could modify our service offering, by the different company. But again, it wasn't until then that it just really changed things for us.
Yep. And then so right now you market pretty much solely to digital agencies. That's your deal.
Yep.
But last year you merged in with Anders, who's what was it, top 100 CPA firm, right?
Yep.
And out of St.
100,
Louis.
yep.
And I assume that their niche is not digital agencies. Are you going to be expanding your service offerings from digital agencies to whatever niche practices they have then?
Yeah. So one of the big things was when they saw me talk at a panel conference at Engage a couple years ago, and with that they were hey, let's look for this virtual CFO. Let's see if we can incorporate that into our service package. I wasn't looking to sell or merge or anything like that. I had really no interest in it. Why not?
Mhm.
Highly profitable, we're doubling our size every 3 years. It's a very high speed, and our bottom line was about 20-25%. So it was like, there's nothing wrong with this.
Yep.
I'll keep doing this forever. And then when they came to me, well, a couple companies came to us and said, you know what? I like how you're doing things. You guys are like at 8 million or whatever we're now. I go, is there a way you can get to 50 million? I was like, oh, geez, Al, we're growing really well. Why do you get 50 million? I'm telling you, hey, we're going to get to 20 million in 3 years.
Right.
They're like 50 million. Like, geez. So we thought about it, and it's like, what would it take for us to do that? And it's like, well, it would take capital. We'd have to have capital because we'd have to, when you grow that fast, it's really hard to be profitable. And so we'd have to hire ahead, expect attrition, get training, really dial a lot of our processes in. And we thought we could do it if we had the right thing, and it just happened the right partnership came by with
Nice.
Anders. They courted us in October, and by June we had, or by actually April 1st, we actually had the deal signed. So it was a very quick courtship.
It is. Yep.
And with that, it wasn't a traditional merger in the sense of merger where we were going to get paid out down the road. It was like the only way that was going to do it is if we got paid out 60% of our value at the date of closing, and then the remaining 40% 5 years later, with a guaranteed salary in between. And so I knew that, hey, I could still, with their help, and they loved it too, because they knew we were there for the long term. We weren't going to just sell and then leave. But we knew that, hey, with their help, we think we can get to that $50 million mark in that 5-year period. If it's 6 years, high five. If it's 4 years, even better. But we knew we could get there versus if we were trying to do it ourselves. And so they were willing to take that risk on us. And so that was the big merger there. And so then the idea is, well, how are we going to do that? Are we going to just focus on creative agencies and really try to get into more? We could, and we're going to, and we're going to spend some money and time on that. But we identified a few other verticals that we'd like to go into, and really kind of repeat our processes and repeat what we did in order to, really blow the creative agency space up.
Makes sense.
Do that. We've identified some, thought leaders and working with that and really kind of just marketing it up now. So we decided to limit it to 5. So we want to have 5 total verticals within the next 5 years, and being our mainstreams. And with verticals, I don't mean that like an accounting firm says, oh yeah, I've got 5 construction companies and 8 beauty salons, and I've got this. Well, that was just happenstance.
Right.
Verticals are when you actually focus your marketing efforts and everything. You become a thought leader in that
Mm-hmm.
market, and people then come to you versus you go to them.
Yep.
And then that's how it's been for us for 10 years. We've not spent any money out doing outbound marketing. We do all inbound marketing. We're doing thought leadership all the time, writing
Yep.
articles, writing books, like you mentioned earlier. We're on webinars. This is my third podcast of the day. All that. Yeah, believe it or not, three. This is three.
Yeah. I've done, I think, 2 in a day. 3 would be, I don't know if I would even want
Yeah,
that.
this is the third time I've had 3 in a day within the last 3 weeks.
All right. The most fun though, right?
Oh, it's a blast. This
All
is
right.
great. Just sharing the story and
Yep.
teaching people how we do it.
So I said at the beginning, niche. I just love that. And we're a niche. We have a niche service, specialty tax. Obviously, niche industries roll off of that just because there's certain ones that do that. But I just love that because you just said everything, all the benefits of it. You can be out there. You can be educating. And that's what I do too. You and I are almost the same.
Oh, I know.
I'm out educating all the time. You have a podcast. I have a podcast. You speak at conferences. I speak at conferences. You write. I'm writing a book. It's starting January 1st. We haven't got the book. I got the outline set for that, but it's just, you can, big examples, and you're going to be one of my examples now, but Josh Lance, craft breweries, they just come to him. Brandon Hall, real estate investors, they just come to him. And he says, I don't know how many leads he gets a month, but it's unbelievable. And he's doing the same thing. He's out educating, he's doing the podcast, and so I think it's well proven out. I think you've done a great job with it. And so I'm going to be bragging from now on that I know you. I didn't do it till today. So after today, I'll start bragging. I know you now. All right. So there's plenty of things I want to talk about, but I want to go back to a couple of things, and we're going to wrap up pretty quick here, and then I'll ask for some final thoughts. But first, and I think this is an important thing, because you and your wife, and this, I'm going way back to the beginning here. You and your wife both decided to do this at the same time.
Yep.
And you've heard this, I'm sure, from people. It's like, well, weren't you afraid? Weren't you scared? And I think when you're an entrepreneur and you have an idea, you just do it. You don't think about it. I think some people do. I don't, at least. It's just like, hey, there's an opportunity there. I'm going to go do it. And I never think, oh, it could fail. And it can, but I don't think that. Were you the same way?
100% the same way. Failure was never even thought about it. All the different roadblocks I hit, I'm like, okay, now how am I going to get around that? It went from the billing, hey, I'm out of money. What do I do? I can continue on, or I can go out of business. Well, let's figure out how to get my money quicker. Yep. And that was, that's innovation there.
Yep.
Hey, let's grow quicker. So it was never, and believe me, I failed many, many times. Every year it's like, hey, this next year is going to be the year. It's going to be the year because X, Y, Z. And then all of a sudden ABC showed up and XYZ is gone. And it's like, well, this isn't going to be the year. Next year is going to be the year. Here's why. And I'm writing it out. I'm forecasting it out. And it was a constant thing. Right. And it was never that I'm going to fail.
No.
It was like, I'm just going to have to figure out how to succeed.
Yep. No. And I see that. And part of what I say with that is there's opportunities that are out in front of everybody all the time. And some people react to them, or some people act on it, which is great. And some people don't, which is great. You don't have to. You don't have to have that. But it's not like, you lucked into something, you fell into something, and it's just you saw the opportunity and you went with it. And I think that's important for people to realize that it's just act, and you can't be afraid.
Right.
You can be cautious or whatever. You cannot take
for sure.
stupid risks, but do it. So both of you doing it at the same time. Yep. Gives me the idea you both have similar personalities that way.
Yep, we do.
All right.
34 years of similar personalities.
All right. Yeah. My wife and I just hit 36 years. So again, we are really, all right. There you go. Although we've known each other we're 5 years before we got married. So we met at 19 years old. So
nice.
And then, so another thing, going backwards.
Yep.
Tommy Bahama, is that at that mall right on the river in New Orleans? Is that the Tommy Bahama?
It is.
Yeah. Okay. I've shopped there plenty of times.
You've been there. Okay. Yeah.
Yeah. In fact,
in the fashion mall.
Yeah, that's the fashion mall. I bought plenty of clothes there. In fact, Tommy Bahama, I got 5 Tommy Bahama shirts delivered to my house today.
Nice.
Just as a pro tip, Nordstrom Rack, you can actually get some pretty good deals on Tommy Bahama shirts.
Marshall, same way.
All right. There you go. So I just needed to get that in.
advisory, I wanted to get into that, but we're running out of time because that's all you do. And advisory is another hot button topic for me and for you, I think. But the pricing, we could have got further into subscription. I think we're going to have to do another podcast because I want to talk about the subscription pricing. I want to talk about the advisory because how important that is. We talked about it a little bit, but how deep you guys get into that as well. And many of other things. We could talk about your family. We could talk about your coaching that you've done with that. But before I get to a couple final questions that aren't related to what we talked about, anything you want to wrap up on the discussion we had so far today?
The big thing is that, I'm completely open book, completely transparent. We open our books completely to our employees. Our employees actually know what everybody makes. So we're even that transparent when it comes to salaries. If you know what salary band someone's in, you know exactly where they're at.
Okay.
We do a lot of cool things with incentives, and so we make everything super transparent, and we open everything up for everyone. So if anybody's interested, I know it's kind of throwing it out there, don't hesitate. Just shoot me an email, and I'd be happy to chat with you for an hour and just kind of help you out. I think that's just the way that the good karma that's been thrown my way, I can definitely throw back. So just let everybody know that.
Yep. No, I appreciate that. And that's one of my mantras is share your knowledge.
Yep.
I try to do that wherever I can. So I was going to get to that at the end, but since you just said it, why don't you tell everybody how they can get a hold of you then if they want to reach out?
Oh, just shoot me an email. It's Jody, Jody at summitcpa.net. Again, it's .net, not .com. I didn't want to spend the money on the .com stuff. So it is .net. So it's summitcpa.net. That's our website. And then Jody, Jody in front of it there. So Jody at summitcpa.net.
So that's the other thing we had in common. When we started, we were try-merit.net. .com became available about 5 years ago, and so now we have .com as well.
Gotcha.
All right, so one final question then before we wrap up, and I ask this to all the guests because I think it's important. We have fun. I think I felt like we have fun here today.
Oh, yeah.
Business is fun, but we have passions outside of business. We have passions outside of work. I assume you do. And so why don't you let me know when you're not working, when you're not running the business, when you're not doing CFO services, what are your passions outside of work? What do you enjoy doing?
Mine are completely around my kids. So outside of like the hobbies like golf and fishing and stuff like that, we focus our time, going around our kids. Our kids, one's in Kansas at med school, and the other's medical device sales in Florida. And so we try to share, time, flying down to Florida or whatever. And if we're not meeting with the kids, then we're doing some traveling. And so we travel a lot. And outside of going to conferences where I'm speaking all the time, we try to vacation and maybe take the family to a really nice vacation once a year. And so just spending time with the kids is really our biggest thing. That's kind of what we've created. That's how we created our company for the most part. We want to work it around our kids, and that's really never quit.
Are you actually me? I mean, am I talking to myself right now? I just got this.
I think so. That's why we got along so well.
All right. Well, Jody, I really do want to do this again because there's other things we can go over. But I really appreciate you being here today. It was awesome. I had a great time. I learned a lot. And I mentioned that January 1st, I'm starting a book. You're going to be mentioned in that book now because you taught us so much information. If the book ever gets released, I shouldn't be talking about the book now because now I'm going to jinx it and we're never going to finish it. But yeah, thanks again for being here.
You bet.
Thank you for joining us today on the Unique CPA. You can find the show notes for today's episode and learn more about Tri-Merit at theuniquecpa.com. Remember to subscribe and leave a 5-star rating on your favorite podcasting app. And join us next time as Randy talks to Tina White of Panoramic Academy on the Unique CPA. Professionalproductions.net